starting with a very interesting interactive session. And the moderator for this session is Raveendranath Kamath. Raveendranath Kamath serves as the president of the Kerala Angel Network Khan, the investment arm of Kerala, TiEcon Kerala, where he plays a pivotal role in strengthening the state's startup ecosystem. Alongside his work at Khan, Raveendranath is also the co-founder and chief financial officer of Next Education India Private Limited. I would like to request Raveendranath Kamath to come on stage with the panelists, Raja Ganapathy, Avik Ashar, and Ranjith Menon.
Welcome to this session. So what we want to do is give you an opportunity to hear three early stage investors, institutional investors here. I would like you to make best use of this session. There is going to be a QR code on stage. Can we have the QR code on stage, please? QR code. All right. So if you have any questions at any point of time, please scan the form and fill the Google form, and I can actually moderate those questions. We think it's more effective use of time. So I would request the panelists to sort of do a self-intro. Please talk about what you do, what your fund is, how large is the fund, and if you have investments in Kerala and anything specific you want to do, what kind of, how you, is the fund has a specific target and so on, please.
Hello. Yep. Good afternoon, everyone. First of all, thank you very much for TiE Kerala to have me here today. My name is Ranjith Menon. I'm a partner at a firm called Chiratae Ventures. We are India's largest homegrown venture capital fund. We manage about $1.3 billion. We've been investing in India for the last 18 years or so, having backed companies such as Myntra, Flipkart, Lenskart, which went through an IPO very recently, FirstCry, Unifor, and a bunch of these companies, largely around early stage tech investments. We invest across software, which is a lot to do with AI today. We look at healthcare, fintech, and consumer tech. These are broadly the large 4 areas that we look at. From this particular fund that we are investing, we also have a very special focus towards deep tech, and are looking to invest about 12 to 15 to 18% of our fund in deep tech. I have been with the fund for the last 18 years, and I have a strong connection to Kerala. I was born here, so looking forward to the conversation.
Hi everyone, and again, big thank you for TiE Kerala and TiEcon to have us here. My name's Avik, Ashar. I work with a fund called Riverwalk Holdings. We started off as a family office about a decade ago. A family office of a 4th generation Indian family based out of Singapore. The family saw a lot of potential in India, were investing for nearly a decade, about 100 companies direct. And then in 22, we set up our first fund, which was a $25 million vehicle. Now in 25, we've set up our second fund, a $50 million vehicle, focusing on Series B investments. So we're at that sweet spot, not early, not super late, kind of early growth capital.
Hi everyone, I'm Raja. I am co-founder and partner at this firm called Spring Marketing Capital. Marketing capital, very deliberate to distinguish us from venture capital. The core of what we offer, the companies we invest in, is brand and marketing advisory. That's our reason for existence, and that's the main reason for founders to invite us to their cap tables. We don't have huge amounts of capital. We are, by design, very small funds. We have limited portfolios because our key strength is really marketing expertise and marketing bandwidth, which is obviously limited. Um, we have two funds from which we invest from. The first is a growth fund. I always smile when I call it a growth fund because it's a very tiny fund. It's 150 crores. It's now fully deployed. We have made 11 investments. The premise of this fund is to make investments post Series B, even Series C, offer our marketing expertise as part of the investment, and try and work with the companies to help them scale and reach a larger liquidity event. Our investments from this fund include Purple, the e-commerce platform for beauty, Mosaic Wellness, the house of brands in health and wellness, Jiva, which is a fast-growing silver jewelry brand, Agilitas, which is building a new age sneaker company on the back of a very large manufacturing setup. And the latest investment, which I'm assuming some of you would have experienced, is a company called Sri Anandas. This is a Coimbatore-based sweets, savories, and restaurant company. Very popular in the south. You know, if you have ever been to Coimbatore, I wouldn't be surprised if you've carried hampers of the brand back with you. So that's the first fund that we have. That's fully deployed. We are now raising our second fund of 500 crores to do the same thing all over again. We have an early stage fund. This is a 275 crore fund anchored by Godrej Consumer, where we make early stage investments again in brands and offer the advisory that we have from a marketing perspective. 2-year-old fund, 11 investments so far. Not sure if you will be familiar with some of the brands we have invested in because most are fairly early stage, but I'll take a crack. A brand called Kava, which is an athleisure brand. I'm actually wearing the hoodie made by the brand right now. Company called Eat Better, which makes better for you sweets and savories. Company called Hoop, which has a range of pain relief solutions. And a company called Yuga Life, which is a platform for health and wellness. So some examples of companies we have invested in. Would love to chat more, answer your questions if you have any. The first question that Kamath asked was, have you made investments in Kerala? I would say not yet. And the reason why all of us are here is hopefully we will engage more with the entrepreneurs from the state and we'll end up making investments in the state eventually.
So I'll probably try to clear the questions as they come and probably if they're relevant. So one of the questions is, are you still investing in SaaS companies?
Maybe I'll take a shot at it, but you know, I really don't think there are any more SaaS companies in that sense, right? Because I mean, we're so much driven by AI today. If you look at for us, we had about 30 to 35% of our portfolio in the previous fund in SaaS. Okay? For this fund, we will invest about 40% of our capital in software. We expect all of that to be AI native and AI led kind of companies. No? So that I think is very, very clear. And SaaS, I think of SaaS as a delivery mechanism, right? You had a license-based software many years ago, which from a scalability perspective had to be deployed at every location. And then with the cloud and the adoption that we had seen, the SaaS kind of multi-tenanted SaaS delivery systems became a lot more prevalent. I think if you really look at the AI adoption of AI, it's significantly more higher into the rate of adoption when compared to even cloud, if you think about it 5-10 years back. So going forward, if you take a 5-10 year view, you will see a lot more AI companies, and that's what we are indexing on.
Interesting. So keep the questions flowing, right? I think it's most relevant for you to ask questions and hear your views, then, you know, and we'll try to sprinkle it with our views. So question for you, Avik, are you still investing in services companies? Services companies, are they investable?
Not from a VC lens, because typically what we're looking for is a certain kind of exponential growth. So services companies in most situations don't fit within kind of the bucket that we're looking for, which is something with a defensible moat, something that can scale exponentially. So no, services companies are not something that we are actively considering.
If I can just add to that, right? What we are seeing is that if you think about outsourcing from the US, there are lots of shops, whether it is in India or Southeast Asia, where a lot of jobs are outsourced, and that AI will eventually, will continue to keep doing it. So if you look at the continuum of the job that needs to be done, we are seeing companies where they will take up the whole job, but the last mile still will have to be done by a human in the loop, right? And I can give you an example of a company called Rapid Claims, which does pre-authorization of insurances in the US, which is a completely manually outsourced process today. Huge companies are built, huge people, bunch of folks inside Infosys or the Wipros and Southeast Asia, where people sit and look at this pre-authorization stuff. Now, the company is building bots to do this, but that whole continuum, it will take them at least a year and a half to build out the whole system that can be completely automated. So we also see companies, like you were saying, I think pure services companies, I think extremely difficult from a funding perspective, and also that business model, I think will be severely challenged with the adoption of AI. But we are also seeing a bunch of companies that do AI plus services. And the premise is that over many years, the amount of AI in that will continue to increase and the services component will reduce. So that, I think, is an element that we are kind of looking at from an investment perspective.
Interesting. So, Raja, so the question is, I think what is very good in this Google form thing is whatever I wanted to ask is being asked. So I think it's good stuff. So question is, while specifically about Kerala, right? So it's probably more nascent. Yesterday you were saying it's more, it's yet to evolve or yet to be as connected as probably Bangalore or Mumbai. So the question is, in what way do you think you can help grow the ecosystem and help the companies grow from the current state they're in and become global? So you have any perspectives on that as a question?
So I think I answered this yesterday as well in a different session. This is a very personal view and it's slightly provocative, so you must forgive me for this. I personally think, that venture capital firms are highly, overrated. We are not as great as we are made out to be. Capital always follows the entrepreneurs. If you build large, sustainable, profitable companies in Kerala, we will all move here. We'll move happily. At least Ranjith and I, given our Kerala background, I think we'll move very happily. But, you have to build, it has to begin with the entrepreneurs. It has to begin with your ambition. It has to begin with your desire to build large, scalable companies. I find, this is my personal experience, again, I may be wrong, but I find that it's not just Kerala. I see the same problem in Tamil Nadu as well, that entrepreneurs sometimes feel content with lesser. I think it was all of that was valid in a different era. Today you can sit in Kerala and build for the world. I heard the industries minister speak yesterday about work from Kerala and building, sitting in Kerala, and that sounds like an inspiring vision. My view is, as entrepreneurs, you have to display the ambition to build large, scalable, global, pan-India companies. If you do it, we will follow. We are followers. All venture capital firms and investment firms follow the entrepreneurs. We are never ahead. So we cannot do anything to change this. We can come, we can talk to all of you, we can engage, but it has to start by the desire of entrepreneurs to build large companies.
Probably that's close to what we had thought of the theme, right? So do you invest in early stage investment? So we say it's mostly on the founder and not probably on the perfect business idea per se, right? So can you talk about that? And one specific question is, what is the craziest pitch that you have ever come across on AI? In AI, yeah. What is the craziest pitch on AI?
Yeah, a couple of things. And maybe I'll think of something what I've looked at. But for us, in early stage, there's very little proof points when we back somebody. It is really the quality of the founder and the idea that he has and how big that can potentially become. And I'll give you why the founder is so important with an example. When I met Mukesh Bansal in 2007, he was building this company called Myntra.com. It was a personalization platform, right? It was a company which would print designs on T-shirts and mouse pads and coffee mugs and so on and so forth. That was the company that we initially wrote a check of $1.9 million. It had nothing to do with fashion. Okay, it had nothing to do with fashion. The margin structure was like 8% gross margin business. Most of his customers were B2B. Infosys actually was a very large customer of Myntra. That company, the beauty, the success of that company lies in the fact that Mukesh and his team figured out that he was able to sell the T-shirt even without their designs, right? And so eventually came a time when about 90% of Nike's T-shirts in India, online sales was coming through Myntra.com, and that's when they thought, okay, let's make this shift to becoming a fashion destination. So I really think, like I think Raja was saying, I mean, for all the insight and whatever we think we have, it is the learning and how what Mukesh heard from the market and made those right pivots that made the company so successful today. And I'll give you another great example of this is Lenskart, which went public about a couple of weeks back. When we met Piyush Bansal, we were the first investors into Lenskart. We wrote a $4 million check. It had Lenskart, bags cart, watch cart, jewel cart, I don't know what else, right? It had a bunch of these things, right? And over the course of the year and a half, they figured it's not that the VC or the investors told them what to do, but what we can help is build structures to think about it rationally. And then, it came to a sense that he had to drop everything else and focus on Lenskart. Lenskart was the smallest of the business because the rest were all catalog plays, and lenses were not, but the margin structure was the highest. And so he made those choices. And the point I'm trying to make is that this is the reason we think it is a bet on the entrepreneur and not necessarily the business, because the business will pivot into something else. Can the guy attract significantly good talent, resources, keep open himself to feedback so that he can kind of pivot to do stuff? I think those things make a huge difference. The other thing is also, I always believe that having people that you can look up to, right, is a very important element in anybody becoming successful. And Bangalore, I mean, for all that we spoke about Kerala, I mean, the first IT park was set up in Trivandrum, if you really think about it, right? But Bangalore took off with the IT services, right? And I think that really helped. While those were all services companies, when in 2006, 2007, when we were looking to invest into companies, the founders that I used to meet were significantly older folks coming from these companies, right? But play this out, 10 years later, today the average age of the founder that I am backing in Bangalore is 28, okay? So you need to have examples of people who made it a big success. And I think we are on the journey in Kerala, right? I mean, even 10 years, I mean, we were talking about this. I mean, I'm very, very impressed with the turnout here, right? I mean, this is a huge crowd. I mean, 10 years back, I don't think we would have had this many people. So I really think we are on that journey, and as we see more and more successes, you will see companies, and we've committed about $6-7 million into a company called Kavli Wireless, which is out of here, right? And it's taken us 15 years to make our first investment in Kerala, and we hope that it'll do well. So, and today we have a lot of other funds. I think the Kerala government is becoming an LP in a bunch of funds. I think some of those initiatives that the government and people are doing here will show results in the next 5-10 years, and I think we are on that journey.
Kamath, I want to answer the early stage question. How do you invest in early stage? Because like Ranjith said, at early days, the business does not exist. You have only the founder. So I asked this question to Mike Moritz, the chairman of Sequoia Capital and a legend in the investing world. I asked him, he's known as the early investor in Apple, LinkedIn, Airbnb. I can just go on. Oracle, Cisco. I mean, just an incredible list of tech companies. And I asked him once, how do you make that investment in early stage when it's just a founder and an idea? Most of these are seed investments. And he gave me a very interesting answer, which kind of I've copied into Spring as well, which is, it's obviously a founder bet. But he says when you are sitting in front of these very special founders, you should have a prepared mind. And he said the best early stage investors in the world are ones who develop a prepared mind. And what does that mean? That means having a thesis on the category, having a view on a subcategory, having met many companies in that space, having invested in that space in the past. So that he says when you are sitting in front of that founder, don't allow him or her to leave the office without a term sheet. And the ability to move fast in early stage, I think, comes from having a prepared mind. Because we meet smart people all the time. I mean, between yesterday and today, I've had a bunch of smart young folks come and pitch to me saying, hey, we are building brands out of Kerala. But I feel you are able to move fast and make an early stage investment, not just because you're able to judge the founder, but because you have a prepared mind on the market and the category.
So essentially what, if I understand you correctly, so even the investors need to be ready to understand what they're looking for in Kerala or founders from Kerala. I don't think they're, it's very different. I think we should be building for global world. But okay, if it is very specific, then you should have a specific mind. So on that topic, another question to you is, which is your biggest miss and which is your biggest sort of hit in terms of returns?
The biggest miss would be Glance when it was spinning out of InMobi. So we had an opportunity to enter that as a family office, and we unfortunately we weren't able to move fast enough. Even though it was a large round, even though it was, I think, a $75 million round at that point, we could have gotten in, but it was a 1-week window of opportunity. Not enough time to understand it, diligence it, get comfort. So we ended up missing out on that. And now Glance AI is, I mean, I don't know how the bottom line is doing, but it looks like it's taking over the world. So that would be the biggest miss. Biggest successes, there are a few. So the beauty is, as a family office that's transitioned into a VC firm, we evaluate companies with an eye and a lens of what can we do to support them, how can we add value. If we can't add value, then we're not the right investors for that company. So we've gone into companies like a Spot Draft, which is a contract lifecycle management company for law firms and Fortune 500 companies. We help them formulate their go-to-market strategy to enter more than 30 countries, because the group's operations are in more than 30 countries. So we introduce them to their first clients, set up their first meetings, their first pitches in each of these countries. So that would be maybe one of the wins.
Okay, I'll give you two for the ones that I missed. In 2007, we had two young guys walk into our office saying that they're building a platform that will sell books online. Okay, the names are Bini Bansal and they were selling 3 books a week at that time. And the whole modus operandi was they will come to MG Road where Gangaram's this whole bookshop was there, buy the books, pack them and send it, right? And we were like, yeah, I mean, best of luck with this, right? Because there was no credit cards, no debit cards in that country. Internet penetration is still, right, nowhere. So, in all our wisdom, we said this is not going to work. Many years later, we got an opportunity to invest again, which obviously we did, and it turned out extremely well for us, but that's one. We could have gotten at, I don't know, sub $10 million valuation, and the company was sold for $18 billion. So that's really one. Second one, I met this guy called Sahil, and his roommates from IIT Delhi, and they pitched to me saying that they're going to build a delivery network, okay, and they will service only e-commerce. I actually spent, this was at a PPT stage, so they didn't really have any investors at that point in time, and I met all the large delivery guys, the Blue Dart, Gati and everybody else, and they all basically told me that e-commerce business is so small, we have all the trucks, we have all the relationships, as soon as it becomes of certain scale, we'll just take it over, right? But it never happened. Sahil and team, we continue to laugh at at the decision that we made at that point in time. That company went public. It's called Delivery, doing extremely well. So, this business is interesting because the ones that you miss and go on to become big will continue to keep hurting, because every 3 years it will turn up in the newspaper saying they raised the next round, say the next round, and so on and so forth. So, and just to put this in perspective, right, in the last 18 months, there are about 4,500 companies that have hit our system in terms of to raise capital, right? And we invest in 7 or 8. So the odds of us getting something wrong is a lot more higher than what we can get right. I think that's the downside of this job.
So Ranjith, if it helps, if it makes you feel better, we said no to, at Sequoia, we said no to Flipkart as the first institutional round. In fact, we couldn't get enough people interested to come and sit to listen to their pitch. So if it makes you feel any better. But I'm going to answer this slightly differently, because you asked the question saying, what's your miss and what's your success? Let me give you an example of one that actually straddles both. So Revant, when he was starting up Mosaic Wellness, we knew him from before. He was the guy who built Behrouz Biryani at Faso's. Then he joined the VC firm. We regarded him very highly. He met me and my partner Arun and said, I have an idea, I'm going to start up. And he drew the business model in our office board. And he said, can you write a 500K check? At this point, he had not met a single VC. And he was like, look, I'm going to build a house of brands.
And he came straight to Sequoia?
No, this was not Sequoia. This was Spring.
Spring.
And he came straight to us and said, look, I would like you guys to be advisors, because all I'm looking to do is build brands. We didn't have an early stage fund, so to our excuse, we couldn't have invested, and we said no. And then we caught the company at Series B, and it's done very well. We are at a 6x of what we invested in 3 years. But where it helped, where the miss helped, is as Ranjith said, as the company started to grow and raise money, we started thinking of building an early stage fund. we said, look, this seems to be an early stage consumer is extremely competitive. And if a founder like Revant is coming inbound and asking us to invest, we are making a mistake if we don't have an early stage fund. And that actually helped us build our early stage product.
So just to, what was so special about the pitch? Was it the idea? Was it the pitch, the personality? Was it the demeanor? What was it?
So I think when you have an entrepreneur who's experienced, who's done it before, and you know the person, I'll be very, very honest, the business doesn't matter.
Okay, so are you saying that, so you may not, even if you're not ready to get institutional funding, it's good to have a chat?
No. I mean that someone like Revant, we should have written the check. It doesn't matter what he's building.
I understand, but I'm saying from a startup founder's point of view, is your advice to, how do they make them known to you? Is that, something they should do?
Sorry, I misunderstood the question. So my view is I think founders are super smart, they figure it out. Again, I think it's less about us. I think they can, I've received half a dozen LinkedIn invites while I was sitting on the panel, and I'm sure it's all coming from people in the room. So I think, I think founders figure it out. They will, they know how to reach us if they want to.
I mean, it is effectively our job to be available. But I want to kind of just cover a little bit of that question that you had asked. So one thing about us, as Ranjith mentioned, we get 4,500, 5,000 applications on a regular basis. So if you're not ready, if you haven't fully baked your pitch, if you haven't fully baked your business plan, or if you're a super experienced guy like Revant and then just draw on a whiteboard, you'll probably get capital. But if you're not, one of the best pitches that I've ever sat in a room in, and it was almost a unanimous decision after the founders left. This is back in 2013. So we are talking about, again, slightly early days of e-commerce. The founders walked in, slide just had the logo, and they pointed at a couple of people in the room. They said, okay, what's your PIN code? And then they said, okay, do you know where that person lives? And okay, few people knew the actual person's house. We all shut up. Everyone else was like, okay, we can tell you that they live in this region or neighborhood. The founders said, like, all right, that's a half a kilometer square radius of a neighborhood. How on earth is any delivery person going to find that house by using this PIN code? You can't. We have street names that are duplicated across almost every city. So they said, this is the simple problem we are solving. We want to do route optimization for all delivery in India. And then they launched into the pitch.
So, again, talking about founders and, one of the questions here is, how do you find and look forward to any potential sort of conflict that could be there between founders? So, question is probably more larger in context. So, do you like single founder companies, multi-founder companies? Do you look for, okay, not more than 3, not less than 2? Do you have such concerns or criteria, and how do you identify and look for potential conflict between founders? I mean, as a team.
Maybe I can begin. We have a preference for multi-founder companies. It's not that we will not invest or we've not invested in a company. For example, our most recent investment is in a company called Faye Beauty, which is run by a single founder, Karishma. But I think building a company or building a business is extremely difficult. And, I cannot, even we consider ourselves a startup. I'm really grateful that I have 2 co-founders for the last 7 years. If I didn't have, I would have given up long back. And I would have given up every year. Because it's so difficult. You hit so many hurdles. There are various points of time in a journey when you feel it's game over, At that point, having a co-founder, I feel, makes a huge difference. So at least all my experience of working with companies, I have found it better to have co-founders. If I have a friend who's starting up, I would say look for a co-founder. But again, I mean, you invest in companies, you invest in founders, and there are all kinds of situations. We have a company with 4 founders, we have a company with a single founder, we have everything in between. I think that's, but yes, to answer your question, I feel if you're starting up now, having a co-founder makes a big difference.
No, I think I agree with that. And also, if I can add, see, Myntra, for example, people know Mukesh Bansal, but there are 5 other founders. Now, there are challenges having 5 founders also, by the way, because your equity is diluted across 5. You know, as a single shareholder, you will not have enough. And, you know, all founders as companies scale might not scale at the same levels, which is why in Myntra's case, you will see, you hear of only Mukesh Bansal, you don't know of the rest, right? Towards the end, when before their acquisition to Flipkart, Ashutosh, who was one of the co-founders, was 3 levels below Mukesh. Okay, now it requires that level of understanding from the co-founders also to work in that kind of a structure. So, you know, the way I think about this is, I think having co-founders, I think absolutely important. It also tells me as somebody who looks at it from the outside that you can convince somebody to join you. Because that means going forward you can get the rest of the folks to join. When you don't have anyone to convince somebody to come and join you, I think it's an important thing. You are willing to share equity. That's another important, something that I look forward to when I think about working with people who are willing to share. But then having said that, you also have to be careful that you don't end up with 5, 6 founders. Delivery was another case. He had the whole 3 of his hostel rooms full. And he had some 7, 8 founders or something, delivery. I mean, it's just crazy if you really think about it, because the CEO will end up with like single digit very quickly, and that is not good for the business.
Yeah, I think, so even in our experience, we have rejected companies that had more than 8 directors on a company that's making a few crore in revenues. It doesn't make sense, right? So is there an ideal size?
I think 3, what we've seen, I think 3 is a good number. Whether it's 2, 3, I mean, it's not, it also depends on what complementary skills you're bringing with, but I think 3 is a good number that we have seen.
So let's say there is a founder who is very strong in basically his or her area of expertise, right? Has a great idea, but does not have the complementary skills. So is very research oriented, does not have the business sense. Would you recommend that he goes and finds a co-founder? Or would you say, no, that's a professional skill that can be hired? Or what do you think? So should they, if it's a single person founder, very experienced and very focused on what they want to achieve or solve the problem, but not so much on the business side, what would you say? What's your advice?
So, see, I mean, this happens in tech, for example, right? You'll have a very strong tech guy who's thinking of the product. But building just a product is enough. Building a company is completely different, right? You need sales, you need marketing, you need everything else that could fall in place. I'm not saying you need to have a co-founder for every of these functions, but it is always good. I mean, we have backed founders who are, single founders in that sense, and which is why I'm saying the evaluation is on, can he attract more different kinds of folks? Is he open to sharing equity? You don't have to call him co-founder, but are you still willing to give him equity so that he stays there? Those things also start mattering, and which is why I'm saying, I mean, the way we think about a single founder, he might be very, very good, but one person cannot build a business.
And is there a ratio or proposed, or would you want, let's say it's somebody's idea, somebody's coming as a co-founder, would you say there should be a huge disparity? Should there be parity?
It's difficult to make a formula there because every situation is very different. For example, at Spring, we are 3 co-founders. We are absolutely equal. I think for me, the second decimal point is higher. That's how it rounds up to 100. But otherwise, we are equal in all respects. And we found that working for us because the 3 of us are, have very different responsibilities in the firm. And in fact, I think last year, we never sat in one meeting together, except the IC calls. We never sat together in a single meeting. And I feel that every situation is different, like what Ranjith explained. Sometimes you have a CEO who's very front. I know a company where the CEO owns 25% of what the product head owns. But if I ask you, if I name the company, which I won't, but if I ask you who the founder is, you will name the CEO. The real founder is the guy who built the product. He owns 40%. The CEO owns 10%. And that's okay. It's worked for them because of the value of the product for that company. So I think it should be horses for courses. It's not, I don't think any investor would want to dictate this. But yes, sometimes we do intervene and say, look, this person is playing a very key role in the firm. And you might want to look at increasing that person's stake to ensure the person remains engaged and committed for the long term.
I guess we are, I think, run out of questions, which is good. I think no more questions from the last 5 minutes, so I think we have done a fair job. I personally want to thank you for coming all the way. So I know you've been, you've probably woken up much earlier. I think you had a 5 o'clock flight and going straight back up. Thank you so much for coming here, sharing our views. Hope to see you more often, not in a forum, but as on the cap table. And thank you again, and I hope at least they can get in touch with you. I think all of you can add on LinkedIn probably and reach out.
Thank you so much.
Any concluding remarks if you would like, or any suggestions, advice?
I would just say, I think what you said a little bit earlier, what all of us are echoing. We love Kerala. I can speak for myself, and I'm sure I can speak for all of us. We absolutely love Kerala. Some of us have a deep connect. Please give us reasons to keep coming back to this absolutely beautiful state. And the reasons will have to come from entrepreneurs. Reasons will have to come from great companies. So please call us back.
No, I think, you know, I'd only say this. I think, you know, of late, from what I've seen, I think Kerala has the ability, given the infrastructure that the government is putting around deep tech. You know, I was really recently at the prototyping lab here in Kochi, and what they're doing is amazing, and the startups trying to kind of take advantage of that. So I think some of those domains within deep tech in space and stuff like that, I think are areas where I think we should kind of focus on. And like I said, we've made our first investment here, and we're looking forward to doing more. And so, you know, really, you know, hoping that we will have more of you people coming up and raising capital from not just us, but just general ecosystem.
I think both of them have covered it very well. But definitely, one piece is double down on kind of the strengths. I grew up in the Middle East. Half my classmates work at Light. I think the sheer aptitude in STEM, in mathematics, in engineering, I've seen some of my classmates go on and build some amazing companies in other countries. So they haven't been built here. So I think what the government is doing, the initiatives being taken up to kind of bring that talent, channelize capital, channelize entrepreneurs here in Kerala is really going to make a difference. And hopefully then we come back.
Cool.
Thank you.
Thank you, sir.
Thank you very much. Can I please request Mr. V. Naushad, Managing Director, Walkaroo, and a TiE charter member. Can you please come over to the stage and hand everybody a medal?